For the Federal Reserve, real conversation about what is going on with the balance sheet, David. Would love your insight, just your take, your opinion. Is that QE or is that not QE? What is that?
So the monetary policy that's been around and has been in place for a long time obviously has been an enormous stimulus. When we sit here today and I kind of think about, the path forward, I think we're now in a period this year after three mid-cycle cuts, for lack of a better term, that I don't expect a lot from the Fed in the context of this year. Obviously, the balance sheet's come down a lot over the course of the last couple of years. All of this supports or impacts liquidity in markets. And I think the Fed has done a reasonable job managing liquidity in markets, even with a speed bump back.
So I'll ask it again then. Is that QE as they start to buy T-bills and the balance sheet starts to expand again?
Anytime the Fed uses its resources to affect liquidity in some way, shape, or form, it's having an impact on markets. I'm not going to answer the question the way you're looking for me to answer it, because I don't think it's a black and white answer. You tell me what QE is.
No.
Well, no, we'll ask Jan Hatzius, we'll ask Bill Dudley, but the answer here is we get a lot of different opinions, including the former member of Goldman Sachs, really someone that drove your economics forward, Mr. Dudley of the New York Fed. We get all these different opinions, and what our audience wants to know is what you have learned from your pros on the desk of those reactions, the movements that you've seen in the short-term paper market. What have you actually observed in the market that gives you information about these balance sheet challenges?
Well, I think that everyone observed that the Fed had a very, very significant balance sheet investment and it reduced that balance sheet. There have been a bunch of regulatory inputs to the amount of liquidity that banks need to hold as the regulations have changed. And at some point, you can reach a supply-demand where, for a variety of reasons, some of them can be idiosyncratic around a moment in time, maybe tax payments, that the supply-demand of liquidity changes and the price for short-term liquidity rises. And we saw that. The Fed responded appropriately by saying we want to make sure that there's enough liquidity in the system. And I think all the banks also, I know we did, I can't speak for others, we positioned ourselves so at the end of the year, when we thought liquidity might be tight, we have liquidity to contribute to that.
Delicate question. Are you constrained by the new set of regulations? Are you happy with them, or do you need to see amendments so you do finance better?
No, we are an adapter to the regulatory framework. And so I think as an organization, we've adapted very well over the decade to the regulatory framework. And look, the regulatory framework continues to evolve. And so our job is to make sure we can serve our clients well, that we have the right resources, and we do not feel constrained to serve our clients well and run our business based on the regulatory framework.
We want your take on the markets and the price action we've seen over the last couple of months. The community, the investment community at the World Economic Forum, pretty polarised on what we're seeing at the moment. We've had a whole range of views. We had Guggenheim Scott Minerd say that it resembles some of the Ponzi scheme. We had Bob Prince of Bridgewater say that the boom-bust cycle as we know it is over. Where do you come down on those two extreme views?
Generally not a man of extremes. So I'd say that there will be booms and busts again at some point, although I don't see one anytime soon. And, as I've been around talking to clients over the last few days, and that's one of the principal things I do while I'm here, I'd say I see and I hear what I'd call kind of a confident, middle-of-the-road view of the current economic environment. U.S. economy is in good shape. Manufacturing sector is a little bit soft. Capital spending has been lower than people would like to see, but the consumer is overcompensating for that. Europe, a little bit better. Headwinds of the phase one deal helps a little, but in the distribution of outcomes, overwhelming likely scenario is economy chugs along this year.
Well said.